Hey everybody, it's Daryl with TMD Realty. Like I told you in my previous video today on my market report, I was going to go over some changes that are coming. Like I mentioned, rates just keep dropping. Talking to different lenders, can't really talk about rates other than they're super low. So man, money is almost free. If I were thinking of buying a house, couldn't be a more perfect time. But there's some changes coming January 1st. Some good, some not so good. Let's talk about the good stuff first. So loan limits on conventional loans. Again, I'm speaking as a realtor. I get a lot of data from lenders. So this year, the maximum conventional loan is just over 510. Next year, it goes to just over 548. And FHA goes from 4045 to 4117. And then VA, there's not a limit on anymore due to the Blue Water Act, but you definitely want to talk to your specific lender. Work with some great lenders. They can tell you about what the actual limits are. And then USDA, I didn't know this, but there's actually not a loan limit. There's just a maximum income amount that you can have in USDA. And there's a couple versions of USDA. Definitely want to talk to a lender about that. Not licensed to really discuss loans. But anyway, here's what you need to know come January 1st. Appraisals are going to basically double in price. So there's probably somewhere around 450 now, be around 800 or more next year from a discussion I had with someone late last week. And also the pre-approval process is changing. What's different about it? A loan officer is not going to be able to write you a pre-approval letter. They're going to be able to write you a pre-qual letter. An underwriter now has to physically touch all your documents before you can be given a pre-approval. And a lot of that is being driven by the low interest rates and demand. That's one of the reasons that appraisals went up. Appraisers are being asked to do more work by the appraisal management company, so they're increasing their fees. And also, we have loans fall out a lot, so hopefully this will reduce a lot of that, having the underwriter actually credit underwrite, which would be good for you, the buyer, because then basically you'll just be subject to the appraisal, which we've had appraisal issues in some areas, but with the increasing demand, hopefully a lot of that will go away. But before you meet with your loan officer, just know to get a pre-approval, you're going to need 2 years of tax returns, W-2s if you're an employee, 2 years of tax returns, and probably 1099s and profit and loss statements and all that. Maybe a letter from a CPA. Not sure. I don't do loans anymore. It's been a long time. But also, you'll need 60 days worth of bank statements, including the blank ones. Just remember that. Your lender's going to ask for that. There's a reason they want all pages. They're looking to see, did you have any checks that bounced? That's the whole reason for all pages. And that right there just about wraps it up. Oh, also 30 days of pay stubs. If I can answer any questions for you, be happy to. I'd just like to give you market updates that I think are relevant in addition to what's going on in the Collin County market. If you have any questions for me, feel free to reach out to me. Contact information will be at the end of this video. You guys have a great day. Talk to you soon.